This is Thriveonomics, presented by Thrive Mortgage. Hey there, welcome back to another episode of Thriveonomics. Thanks for joining us today. Appreciate you spending time with us and learning more about who we are and what we do and kind of what we talk about on this show. As you may be aware, Thrive Mortgage is the title sponsor for Thriveonomics. Thrive specializes in providing legendary lending experiences for their clients. And we would love the opportunity to meet with you, talk about your needs, and talk about your unique financial situation and see what would be a good plan to put together for you for your long-term financial success. So reach out to a local Thrive loan officer, and we'll get you, if you need help finding one, you can go to thrivemortgage.com and or just reach out to us at thriveonomics@thrivemortgage.com, and we will help direct you in the right path. So coming to join me today for today's episode is Loren Riddick. Loren is our national director of reverse lending. Did I get your title right there, Loren?
Sounds perfect, James. Thank you, buddy.
Awesome. Well, the reason why we want to have Loren on is because I have yet to meet anybody as passionate about reverse mortgages in this entire world than Loren Riddick. And so we want to have him on not just to talk about the reverse process, but also to dispel a lot of misconceptions that are out there about the reverse mortgage product, and actually talk about how it does, in fact, benefit those senior borrowers out there, or those seniors out there who may have a lot of equity or who might be looking to purchase a new home, but cash flow being what it is, that might limit them in terms of their options. Well, a reverse mortgage is a great way to supplement their retirement plan. And Loren's got all the info. We'll get into that in a little bit. But first, Loren, I just kind of wanted to spend a little time getting to know you. Well, of course, I have already spent time getting to know you. But let's give our audience, our listeners out there, just an idea of who exactly you are, what kind of makes you tick, what are you passionate about, and a little bit of your background in terms of how you got going in the mortgage. So let's start there. So I know you played basketball. You're a tall guy like me. I know you played basketball in college. Where'd you play?
Played at Walter State and East Tennessee State, James.
East Tennessee State. Did you ever have a chance to go to the NCAA?
I did. I tell folks all the time, and if I could, before we get too deep into it, I just want to thank you and Raul, the great job you guys do. And for those of you out listening, so proud to be at Thrive. And whatever your need, we look forward to serving you. We have so many capable folks to do a good job. And of course, we'll talk about reversal a bit later, but I tell folks that, if you saw the movie Rudy, the young man that walked on at Notre Dame football, and of course, and everybody else, Sylvester Stallone and Rocky, that was pretty much my experience, James. 9 of the 12 went pro. I was not one of them, but we did get to go to 2 NCAA tournaments. That particular team went to 4 NCAA tournaments and as many conference championships. And of course, back in those days, the mid-majors, you had to go win the whole tournament.
You had to fight your way in.
You had to win the whole tournament. Doesn't matter what you did. So it was that make it or break it mentality. And we actually shocked the world. We were the first 13th seed team to beat a number 3 seed team in the nation. We beat Arizona, and then we ran into the famed Fab Five of Michigan.
Oh,
that's who ended my college career. So it was a great run, and I come from a great pedigree. My dad was a coach and a championship player as well.
Well, that's funny. So that's one more thing that you and I have in common. I got to play against Jimmy King in high school, and you and I are about the same age. So yeah, that was that. I didn't play ball at the next level after high school, but yeah, that was for a long time. That was my claim to fame. That I got to guard. Awesome. I got to guard Jimmy King. I held him to 10 minutes. I held him to 10 points in about 3 minutes, I think. So so yeah.
Well, the one thing I think we both love, and for those of us that know athletics, is, as far as basketball, you may not make every shot, you may not make every dribble, you may not make every pass, but hustle, playing defense, being willing to get on the floor and just roll your sleeves up and work. And I think that that's served us all well as we serve our clients today. And I think that sports is just a great way to train young folks to have that mentality. So I know we definitely share that.
Absolutely. All right. So let's so enough about the glory days. Let's transition now into talking about your jump into the mortgage industry. How did you get your start getting into financial services?
Actually, James, I actually have 2 degrees, one from Walter State and one from East Tennessee State.
Mm-hmm.
And I graduated in 92. And at that time, it was a very precarious situation for folks, trying to get out in the world. Either you're not enough, you don't have enough qualification, or you're too qualified, overqualified. Right. And, they didn't tell you that in school, right? They tell you to go get your student loans and you make your good grades and then you'll get a job and retire. And that was the plan, and it didn't work out. And look for employment. I ended up going back to my old high school and elementary school system and did some substitute teaching. Mm-hmm. And then I spent about 7 years. I put myself through school as I walked on those teams, actually doing windshield repair. So fixing the little chips in windshield. I have my own business, and that helped me get through school. And I made some relationships with different car dealers, and I never thought I would be in the car business. So, but there was a unique company called Saturn. Many of us remember Saturn. It was an amazing company, American-based company, meant to take back some of what the automotive industry lost to the Japanese with the smaller cars. And you might remember, or may not, Saturn had a very unique perspective because they were the only car dealer at the time that actually gave you a 30-day money-back guarantee. If you don't like the car, you get your money back, which was unheard of, very safe. And so it was car sales, but not really, because it was one set price. It was the Carvana and CarMax before there was such.
Sure.
But it was a great experience because I learned that I enjoyed helping people, James, and that was really important. The only problem is that I was working every Saturday and every other Sunday. So I frankly almost lost my family over that. And a friend of mine who had left the Saturn dealership about a year earlier was doing quite well in the mortgage arena. And I answered an ad, made an opportunity, went and, just really enjoyed working with folks. And I still work a weekend or two, but not like I used to. And so I transitioned into the mortgage arena around 98 or 99. And then I was in that industry for, I guess I've been in this mortgage arena for 21 years. And as we transitioned into reverse, it took about 13 years for me to take my fingers out of my ears and open my eyes, as it is for many of us. And we'll touch on some of that, but
sure,
that was how I got into the business.
All right. Well, that's an excellent story, and it's kind of unique having these conversations with everybody that everybody's got different motivations or different journey or different path that led them to where they are now. And I'm kind of the same way. And then I used to be a realtor. I've also was a high school teacher. There was kind of some overlap there. And then got out of teaching full time and decided to get back into real estate full time and transitioned that time over to the mortgage industry. And ever since I made that move, I have thought to myself on multiple occasions, dadgummit, I wish that I had made this career choice back in 1996. But I don't lament it. I can't lament it too much because it's the all those experiences from graduating from college and starting my career and making all the different choices that I've made throughout my career have kind of culminated into the skills and the talents that I've got now. So you and I, so we might have different journeys to get where we are, but I have yet to meet anybody, especially anybody at Thrive, that really regrets having gotten into this industry because of what we're able to do. And I know that you've got an extreme passion about doing what you do. So what was the light bulb moment or the epiphany that you had about wanting to be so engaged with reverse mortgages?
Well, I tell you, it's maybe not it's not that unique in one perspective, but and oftentimes it's a definitely a unique situation, James, because I think one important thing, we kind of talked a little bit about my history, and I'm a 5th generation East Tennessee fella. I've been married to a lovely lady for 26 years. My college sweetheart, Missy, and 23-year-old son, Tucker, who actually walked on at Alabama. He's a national champion football player.
There you go.
The unique thing for him is he had never played football really before since he was a little boy and just a basketball guy, and decided after 2 years of going to school he would do that. And God thought he would give us a pop quiz. And so we've got a 13-year-old daughter going on 18 years old. But being in East Tennessee, James, it's just I love Tennessee and I love Texas. Texas. And many of us know that the Tennessee Volunteers got their name because Tennessee brought more volunteers to the Alamo for Texas to fight for independence than anybody else. But we're a very conservative people. I love my home. I'm only about 20 minutes from the Smoky Mountains. But let's just say if you do bad things to people, James, bad things can happen to you, especially if you're doing it to seniors. So quite frankly, I wanted nothing to do with the reverse mortgage. I mean, I thought it was snake oil and voodoo, and I just wanted nothing to do with it at all for those reasons. And, you know, being having a father that was a basketball coach and teacher and mother and grandparents and, you know, just a good name in the community. I just didn't want to touch it. So I would actually, I'm going to confess today, I actually would turn people away, James. People that would come to me for that advice, you know, I would turn them away because I just didn't believe in it. And one day I had a very, very intelligent client, uber intelligent. Many of us are familiar with Oak Ridge, Tennessee. That's a hotbed for scientists. And that's where the nuclear bomb was developed for World War II. They used to call Oak Ridge the secret city. Well, when we often get those engineers, James, they'll come in with the laminated folders and graphs, and they've already done more work than we would have done, you know.
Probably.
And so he started, hey, Loren, you know, you've helped my family. Are you an FHA insured lender? Well, John, yes, I am. But why would you ask me that? Oh, that means you can do a reverse. And I'm like, oh, no, not me. You don't want to do that. Right. And so I realized that, you know, he made a compelling enough argument that let's just say that it was, well, Loren, either I'm going to be your guinea pig or I'm going to go deal with somebody, you know, 2,000 miles away. So reluctantly, I processed his loan. I originated his loan, and he loved it. And but I still didn't have it figured out. And so I was doing some research, James, and ironically in San Antonio, Texas, just south of Austin there where you guys are, in 2011 was my very first National Reverse Mortgage Lender Association conference. I went there expecting a used car salesman convention. And when I arrived, I realized it was not that at all. It was a very, very sharp, very high-end professional that really appreciated what they do and how they do it for their individual communities and how they impact their seniors. And so over time, I've not missed one since that time. And there's a designation called CRMP, Certified Reverse Mortgage Professional. It's a very tough designation to get. In fact, there's only about 180 on the planet. I was able to earn that about 4 or 5 years ago. And for the last 5 straight years, I've actually had the opportunity and privilege of speaking at that same conference as a presenter recognized nationally. So it was just a really good transition and walk. And, you know, very proud of our Thrive folks. We were able to take, I think, 12 to 15 of our Thrive team members to this national conference back in November so that we're more than able bandwidth wise to take care of everybody's needs. So that's kind of the walk. And, you know, in the industry, 20 years with the same company, and then been very blessed to be with Thrive a year. And yes, we all gravitated to the same phenomenal place.
Awesome. Well, that's a really cool story. And I really find it interesting that you were so, that it took a client to kind of spur you into to checking out this program and learning more about it. And just through doing that research, you became a raving fan of this product, and now you're leading the charge for Thrive Mortgage in this regard. So it's excellent testament to just how powerful a program this can be. So let's dig into some of the specifics about reverse mortgages, because you were not alone in your assessment of a reverse mortgage being nothing more than just a pipe dream. And so what would you say? We'll start with the misconceptions, and then we'll get into the reality and debunk those myths, as it were. So what are some of the biggest, what are the top 3 or 4 misconceptions that you think people have about the reverse mortgage process?
You know, James, that's a wonderful lead in. And I think that folks, let me explain to those that are listening from behind the curtain. It's a very unique process. It's much different than our forward process. And we're one of the very few companies that truly believe in both serving our clients in the forward and the reverse arenas. And if for those of us that are specialists in both, if you will, we have an ability to sit back and prescribe either avenue because it's not for everybody. But the first thing I would say is that there's a great quote that one of my colleagues shared with me, and I probably don't even need to read it, but just out of respect to make sure, it says, if something you thought about retirement, money, and mortgages were wrong, when would you want to know? And if you just think about that, if something you thought about money, mortgages, and retirement were wrong, when would you want to know? And then I think that in itself opens up a lot. And then, but here's the other beautiful thing. Probably, if you would allow me to, James, in 5 minutes or less, I can share with you and just, many myths. I mean, like you said, there's basically, I think, 3 myths out there, or there's 2 majors and there's a distant third. So the first one I would say is that most folks feel that they're going to give their home up to the bank. In fact, James, when I talk to clients all around the nation, in fact, our realtor partners, financial planners, elder care attorneys, CPAs, financial planners, loan officers. Hey, if you've got a client that's got 12 years left before they pay Wells Fargo or some other bank off, who owns their home until they pay it off? The bank or the client? Well, almost without fail, the bank, of course. And folks will say that like the sky's blue and the sun is warm. And yet we're all wrong. Because when I talk to a group of realtors, James, I say, well, now if that's so, when's the last time you had a purchase contract on your listing and you had the bank sign the contract? Or better yet, in preparation of that listing, you realized that the bathroom and the kitchen needed work. When's the last time you called Wells Fargo to get permission to remodel their bathroom or kitchen? Never. So the first thing, if folks can understand that there's no difference in ownership between a forward loan that you make payments to get to zero and a reverse, which allows you the flexibility of continuing to make a payment or to keep the payment in your pocket and let the balance grow. When you consider that, if folks get that, James, that's half the battle. And that took about 2 minutes. It's that simple. And what I found is that if they understand that, it takes a lot of the anxiety off. The second myth would be, it sounds too good to be true. And so then I'll refer folks, many of us have a common knowledge of forward lending. In this case, VA, FHA, and there's mortgage insurance, upfront mortgage insurance premium on those particular programs. Right. Then I will ask the question, does that insurance, then of course it's not State Farms and Allstate. We're not talking about that. We're talking about mortgage insurance. Right. Does that protect the client or the servicing bank? Protects the bank. Of course, it's the servicing bank. Right. So then I will explain that the carrot at the end of the stick for this particular program on the HECM version, home equity conversion mortgage by FHA, is that FHA has a carrot at the end of the stick that guarantees the bank that no matter what, if they suffer a loss after the parents sell the home, after the parents pass away or move away, then the children or the client, they can sell the home, refinance the home, or walk away scot-free. And so when folks understand that no matter what happens, even in the event of the senior living to 100, James, and they end up owing more than the home is worth, FHA steps in and pays the freight. And that's a great point because, number one, it takes care of the bank. And without that, there is no deal. Right. If there's no assurance that they're going to get a payday, no matter what, there's no program. Right. The second benefit is that the second and third benefit to FHA benefits the children or the heirs. Number one, it is a non-recourse loan. So no matter what, that negative debt is not handed back to the estate. Right. And it's even one better, James. They actually guarantee the heirs 5% equity, my friend. So in other words, if we just take a very easy number, if there's a $100,000 home out there that started at a $50,000 loan when they were 62, and they live till they're 105 and they owe 130, and little Johnny walks away, he only has to refinance 95%, which is $95,000 of that $100,000 value. Now he's got to have the ability to do that. And we at Thrive would love to help him, but the bank would still lose 35 grand, but they don't because FHA pays the freight. So that would be number one. They don't give up ownership. Number two, the reason it's not too good to be true, the reason someone can put half the money down, the reason they can put $300,000 down and buy a $600,000 home and have no payment for the rest of their life, a reverse purchase, or the reason that they can get $300,000 out of a $600,000 home in lumps of cash, or maybe even get payments out of it and yet not make a payment out of their pocket. The only way they can do that is through FHA. And then the not too distant third, James, is that it's not like arguing salvation, my friend, but we've all been kind of taught to believe that it's a good thing to have our home paid off. You know, when we talk to seniors all around the nation, they work their whole lives to get to zero. And then when they get to zero, James, they have to do the whole thing all over again if they want any money, or they have to sell it to a real estate agent, right? So the one thing that makes me so passionate about this is that, yes, I've been able to do it from an administrative level and obviously oversee our division, but I still have all these relationships over time with my senior clients that have really grown to benefit and learn and love, and being able to share that with our other Thrive loan officers and how they can help people in their communities and their referral partners. Very passionate, because once we have them understand, you don't give up ownership, it's not too good to be true. Now they can start thinking about the fact that, no, wait a minute. If you've got a $600,000 home and you owe $300,000 and you're paying $1,500 a month, and just you still have
interest,
all we're doing is increasing the $300,000 that we can't take with us.
Right.
And studies reveal that less than 1% of the children want their parents home. Less than 1%. So in lieu of making a $1,500 mortgage payment, take a life policy out. Do something different. You know, put yourself in a plan to have some advantages. So having a paid off home or continuing to make a payment over 62 just doesn't make any sense, because we shouldn't burn the note and celebrate, because we're locking it away forever.
Right.
And so I think that as people understand that, it's a good catalyst and a pivot point to understand why folks like Dr. Wade Pfau of the American College states that financial planners with fiduciary responsibility, they're more likely to be sued if they don't talk about a reverse than if they do, because of that power and how that can come into play. I mean, we were in our Denver office, great team out in Denver. One of the top floors, full glass walls all the way around, James. And, you know, the financial planners at this firm they weren't mean, but they were like, well, Loren, you know, a lot of our clients are high net worth. They have millions. Why would they want this program? Because why? Most folks think it's what? The loan of last resort. It's the loan of the needy.
Sure.
Well, the fact that we can go up to $6 million on a portfolio product probably should tell you a lot. But here's what I told them in general, is that when there's a bear market going on right now and the burn rate is so aggressive on assets under management, they could have $10 million. But if they have a paid off home that they can't access, especially during a downtime, that's why Dr. Pfau says, look, let us show you how to do that. A lot of folks don't realize, James, but in that same capacity, in closing on this subject, is if they have that $600,000 home, and they take out a $300,000 line of credit, James, there's a 4 to 6% growth rate, 4 to 6%, which means at the end of the first year, that $300,000 that the client in essence sowed in the ground, a seed in the ground, they can literally pull. It'll be 312 to 318 in 1 year.
Nice.
So they can pull that 12 to 18 out and still have access to 300,000 and do many, many things. Now, it's not free. They're going to pay interest on what they pull out, but those are the three. And you got to slow me down, because I'll get going all day. So
that is precisely basically the last 10 minutes of listening to you is precisely why we wanted to have you on, because this is very important. It's a very important distinction for folks to draw, and that it really comes down to the perspective that you were just talking about. It really comes down to, how do you personally view real estate? Do you view it as it's just one component of life, and it's a nice home, and it's set in stone exactly how I'm supposed to manage that asset, whereas my money market accounts or my CDs or my stock portfolio, my IRAs, that's a completely separate conversation to be had, when that's really not the case. That real estate is a tool that can work in your favor. And I actually had last year, actually had a conversation with a gentleman who was in his mid to late 80s, and he was talking to me about doing a 30-year mortgage. No problem. I will be glad to have that conversation with you. I'm not going to tell you. I'm not going to. Number one, it's against the law to do it, but I'm not going to. I'm not going to wave you off of doing a 30-year mortgage simply because of your age. However, let me show you something. Let's have a conversation about something that would be a far greater benefit to you, not because you're 87, but because of what it's going to allow you to do. Because he was kind of in that situation. He wanted to buy a $500,000 house. He was selling a $425,000 house down in the Houston area, and wanted to buy a $525,000 house here. And I said, okay, how much you planning on putting down? Well, I want to put down 50%. I want to put down 20%. So he wanted to put down a sizable chunk for the down payment. And I said, why? He said, well, I want my payments to be lower. And I said, if I can show you a way to eliminate your payment altogether, would that be interesting? Would that be of interest to you? And he was like, well, absolutely. And so I talked to him about reverse mortgage. And the very first syllable of reverse mortgage started coming out of my mouth, and he cut me off. He's like, nope, not interested. Yeah, exactly. So it's just a matter of educating consumers that real estate is a tool. Real estate is an investment tool, whether it's your personal property or an investment property, because you can't do reverse on investment properties, but you got to live there. That's one of the caveats. And we'll talk about like specific guidelines that people need to know here in just a second. But if you have the view of real estate as an investment tool, and look at a mortgage loan professional such as Loren as somebody who has a professional obligation to help you responsibly and professionally manage the debt that's associated with that asset, it really starts to change your thinking. And the way that you were able to dispel a lot of these myths to a room full of financial planners who have taken course after course and got license after license and umpteen different characters after their name, the fact that you were able to walk them through logically and truthfully and spell out the power of what this can do to not only supplement, but vastly improve the net worth of their clients, it really is kind of an eye-opening revelation that they're coming to. So you did a fantastic job of kind of spelling it out. So so we've dispelled the top 3 myths. Let's talk about the facts. Let's talk about the truth of it. So what are some of the first things that consumers need to know about how a reverse mortgage works? What are some of the guidelines or the restrictions that they need to know that they have to operate under?
Some of the general overview. I think, again, I would also just, again, piggyback on what you just mentioned earlier, James, is that Thrive is such an amazing company. Those of you that are looking at us, and, we're excited to be able to bring great value to you. And to your point, James, it is a plan. We're not an order taking kind of company. We want to listen to your needs, help you in whatever capacity that is, construction, whatever it is. We want to help you refinance, purchase. And so I think that as you talk about reverse, and as we understand, we have all the we have some webinars that we do. We have technology like you and I are doing now, where we can actually meet with your children and help everybody understand. But I think understanding that, number one, the minimum age requirement is 62. Now, Texas is a little unique in that both borrowers must be 62. If you're married, you're on title, both borrowers have to be 62, period. Okay.
Is Texas the only state that has that exception?
I believe that is the only state. Something's telling me maybe Utah is. I'm not licensed in Utah.
Right.
Yes, I do know that is the case for Texas. Everywhere else in the nation, just one borrower needs to be 62. You could have a 70-year-old husband and a 55-year-old wife, and we base the numbers on the 55-year-old so that she can also live there until she's 150, which I kind of got the cart before the horse there. Right. When you do the reverse, you cannot outlive this loan. It is your primary residence, as James mentioned earlier, and you get to stay in the home until you or your survivor make it to 150 years of age. And then upon the passing of the survivor, or when you go 1 year without inhabiting the home, now that is a life-changing event, and now there's up to 1 year for your heirs to sell, refinance, or walk away.
Mm-hmm.
So I would say first, 62 is the minimum age. Now, in other states, Tennessee is not one, unfortunately, which is where I'm calling you from.
Mm-hmm.
But the majority of the union allow for a portfolio product. Texas allows for portfolio, get to 62,
Mm-hmm.
but they also offer that portfolio for the age of 60. And that's a portfolio product. That's a product that we can offer that goes outside the realm of the reverse. So right now, an FHA reverse will go up to a purchase price or a value amount, James, of 765,500, which mirrors the highest national lending limit for FHA. There is talk that they will make those county specific in the near future, but as of today, it's all the same, which is a big benefit for those that don't have that higher amount.
Mm-hmm.
Up to $6 million for that gap. That's where the portfolio comes in, and that helps us with things like a 60-year-old borrower.
Mm-hmm.
It helps us with things like maybe a condo that can't be approved through FHA can be a spot-on approval. And of course, just the big thing is it can go up to the $6 million value. Another thing, a lot of folks don't realize there is no credit score requirement.
Right.
Now, there is an asterisk with that. It used to be, James, that I think about 4 or 5 years ago, if you fogged a mirror and had a driver's license and a Social Security card, you got the loan. You did not need any income, no credit whatsoever. Well, over the years, and since Ronald Reagan really got behind this program in the late 80s, there's been over 1 million reverses done since the late 80s. But over time, because it's such an amazing program, it's been used a lot. And the program's taken some hits. And so in order to maintain the program, they continually tighten the purse strings. And part of that purse string tightening, if you will, is they instituted some credit requirements. For example, if we've got a client that's, let's say they're what you and I might describe as a mid to high 600 borrower. They've not been late on their mortgage, James, in the last couple of years. They paid their property taxes, property and insurance charges regularly. They may have a late on a credit card, but that's about it.
Sure.
No problem. However, if we've had someone that's either shown an inability or an unwillingness to pay property-related charges or their credit in that 24 months, we may now have something called a LISA, which is called a life expectancy set aside. And without getting too granular, that's just for that client that we want to make sure that client will never, ever lose their home to not paying taxes or insurance. Unfortunately, I'll just go ahead and say it. The majority of children, in my opinion, do not care as much about their inheritance as they do about their parents, unfortunately. And so sometimes there's situations where either just out of health issues and degeneration of cognitive abilities, or there's other factors involved, people in their pocketbook, if you will, loved ones, right? But if they don't pay their property charges, they can lose their home. So the LISA, in essence, is a front-loaded escrow account. So, for example, if you've got that $600,000 home and someone is 75 years of age, by the way, a 75-year-old, you can pretty much set your clock to, that's about a 50% availability of their money. So if it's a $600,000, they can get $300.
Sure.
If they're 62, it's going to be more like 40% instead of 50. And if they're 85 to 90, it's going to be more like 60%. Okay. So the idea would be that in the context, let's just say of a 75-year-old with a $600,000 home, if they were doing a purchase or if they were doing a refinance, instead of that client getting 300, James, they may only get 200 or 225, and the remaining 75 to 100 is in a front-loaded escrow account, the LISA. It's growing at that 4 to 6% growth rate we talked about earlier, which projects that coverage all the way to early to mid 90s. Okay. So you can have, so that's a really good deal. So no mortgage payment and no taxes and insurance. And it doesn't always have to be forced place. It could be optional. So if I've got a husband or a wife, and let's say, heaven forbid, one of them are terminally ill, and the one that was ill is the one that's used to handling the bills. Well, we can actually set it on cruise control, either by monthly income and or a disbursement to cover those taxes and insurance. On the flip side, with a purchase, if they've got some rough credit, they can still put $300 down, but instead of buying a $300 or $600,000 house with $300 down, Maybe they put 300 down and buy 500 or 475 because a portion is going to taxes and insurance, but they get to put, a little more than half the money down and they don't have anything to worry about, really. Right. So that's pretty much the overview. Can do double wides on a permanent foundation. And income wise, the only thing that this may apply to more of those of us in the mortgage arena, but we deal with things like DTI, debt to income ratio.
Right.
In the world of reverse, it's just about residual income, what's left over. Sure. So in essence, whether you're in the South is a little less expensive, out West a little more, Northeast a little more, but roughly it's about $600 left over, $600 to $800 left over after the bills are paid, they're on credit and property related charges. And if it's a couple, maybe $1,100-1,200. So it's really not a debt ratio issue, and we don't gross up income. And the only other thing I would mention is that it's a very protected process. So even if somebody walks in our gates today and says, "Hey, I saw you guys on James' podcast, sign me up." If they've not been to counseling, there's a counseling requirement beforehand. Right. Whether they go to Tom Selleck and AAG or wherever, they got to do the counseling. Right. And so it's a very good process, but it's something that obviously I'm very passionate about.
Clearly. And so you kind of disseminated a lot of very, very specific information. And given time constraints, obviously we could continue to go on and on about multiple different scenarios. The bottom line is, if this is at all an option for you, speaking to the consumer and the listener, if this is at all an option for you, or if you are the family member of someone for whom this is a concern, or something that you think that your family members, your elderly or senior family members should be looking into, it is definitely in your best interest and in your family members' best interests to examine all the facts and to make an appropriately informed decision regarding reverse mortgages and whether or not it's the right thing. Maybe it is, maybe it isn't. But the bottom line is, until you know all the facts, until you are armed with all of the accurate information, rather than just going off of chat room threads and discussion threads that you see online, talk to a local expert. Pick up the phone, give Loren a call, and we'll get to ways in which you can contact him and get in touch with either Loren himself or one of our other reverse experts within Thrive. We're scattered from coast to coast, honestly, and so chances are good we can, no matter where you are listening to us right now, we can probably introduce you to somebody that knows what they're talking about and can educate you properly. Thinking back on the anecdote I was giving of the gentleman that I spoke with last year, as we were having our conversation, he opened up more and more. The more he listened to what I had to say about it, and he kept an open mind about it. And one of the things that I asked him that really got his attention is, okay, here are the numbers. If you were to purchase this home, even doing 30% down, let's just kind of split the difference between the down payment amounts you listed. Let's say 30% down. If you were to get this mortgage, a 30-year mortgage, your monthly payment that you would be on the hook for every single month is in excess of $3,200. If you, including property taxes and insurance, all rolled into the monthly payment. So $3,200. Only $1,200 of that was the component of taxes and insurance, because it was in a kind of a high property tax area. And so there was a pretty good chunk of change. That means that roughly $2,000 was just going to principal and interest. And for the first few years of the loan, heavily front loaded with interest, just because of the length of the term. So now my question to him was, what else could you be doing with that $2,000 a month that would otherwise be going to pay mostly interest for the foreseeable future? And I said, what would you rather be doing with that $2,000? He was like, "Oh, are you kidding?" He said, "I'd be taking my family on trips. I'd be storing it away. I'd be putting it in a trust fund for my adult children or for my grandchildren, setting up a college fund." He did the homework for me, and he listed off about a dozen different things that he would rather be doing with that $2,000. And all I had to do was just shut up and say, okay, you're kind of making my point for me.
Right.
And so it's one of those things where once you're armed with the right tools and with the right information, it just, you make such a more, number one, a well informed decision, but you're making a decision that you are 100% at complete peace with. And you realize that, no, this really is the smart decision to make for this situation. And like I said, it's not for everybody, but at
Right.
least do yourself and your family a favor by getting armed with that information. So, Lauren, you did a fantastic job of kind of spelling it out. So let's talk about ways that folks can get in touch with you. So what's the primary way that folks reach out to you, ask questions?
Well, I think what I would say, obviously, and thank you. I definitely look forward to sharing that. That's most important, or as important as anything, just so you guys know how to reach us. But we have a team, folks, as James said, all around the nation. I mean, in this current economic environment with a lot of different uncertainties, rates are at all-time low. If you haven't had a checkup, if you will, on your current mortgage portfolio, I don't care if you have just one home or you have a whole portfolio of rental properties or what, find your local Thrive loan officer. Like James said, we are coast to coast, and then they will know how to get a hold of us, and you will have someone local in your market, most likely, that we can help you and get where we need to be. And if I could, James, just one quick note. Folks, a lot of times I talk to seniors countlessly, just like you have, James, and one of the concerns that seniors say, well, I don't need that. It's not for me. I don't need it. Well, here's the thing, folks. You may not need it today, but there's a good likelihood that you might need it tomorrow. And more importantly, you may need it, and there may not be the opportunity to pull the resources from your home. So if you can go ahead and set up your line of credit, it will empower your children to let your home take care of you. You spent your whole life paying into your home, making these payments, and you could make a payment for $1,000 a month for 3 years on a forward loan. That's $36,000. You can't get it back. With a reverse, you have an optional payment. You could keep making a payment, and then you can pull that out, and again, not leave that burden on your children to take care of you. So it's a whole different lens of looking at it. But how you'd reach us, folks, listen. You can send an email to reverse@thrivemortgage.com. That's reverse@thrivemortgage.com. We have a wonderful, wonderful senior themed Facebook page. And I wanted to write down, it's Thrive Senior Freedom. What a great name, right? Thrive Senior Freedom Facebook page. Just, you can share that. You can come to it. We've got a lot of great content. We're building on that on a regular basis. We've got a series of webinars. I know that by the time we manufacture this, a lot of the month of June will be out, but June is Senior Thrive and Freedom Month. And you can reach us simply by going to that web page or going to that Facebook page. You can also reach us at reverse@thrivemortgage.com. And in fact, folks, just to let you know how much I care about everybody looking, especially if you have a friend or family member, James, I'm going to share my personal cell, 865-850-2300. 865-850-2300. I will share that as well, and we'll get you where you need to be. Our direct line for our toll free is 877-329-6382. That's 877-329-6382. But you reach out to us. We love to help anybody we can. And of course, you can do that by reaching out to us directly, or you can reach out to through one of your local Thrive representatives.
Excellent. All right. Well, great stuff. Yeah. And just to reiterate, the Facebook page that Lauren was talking about, if you get on Facebook, just go facebook.com and then do a search for Thrive Senior Freedom. And you'll be able to find the page straight away. It should be the first listing for you. So go there for some great information. Look for upcoming events. Loren is great about hosting webinars, and whether it's just himself or the team, or having guest speakers in, like you mentioned, Dr. Wade Fowl. Always interested in spreading the reverse gospel, as it were, according to Thrive. So, but anyway, Loren, thank you so much for taking time to be on with us today. Really appreciate everything that you're doing to build up the reverse, the legacy of reverse lending, both with Thrive as well as across the country. and very excited to have you a part of our team and see everything that you're doing.
And listen, I'll echo that back to you, James. The job that you guys do there at our studios in Austin, and so much amazing content. The library already is outstanding, and we're just getting started. So I consider it a great honor to be on your show today. So thank you.
Cool. Well, I appreciate you. Thanks to my podcast producer, Raul Espinoza, for being a part of today's podcast. Raul, being the millennial that he is relatively quiet when it comes to questions about reverse. That's
yes,
that's a few years off for you.
Yeah, I had to
Raul,
you
have grandparents and aunts and uncles and folks, right?
Yeah, I do.
All right.
There you go. Now you're educated. Now you can go share it with them.
I'll show this to them. But yeah, I had to definitely bow out of this one. Just I don't want to say anything that I don't know about.
No worries.
But it was good. It was a good listen.
It was. Yeah. Did a great job.
So, thank you so much.
Absolutely. Thanks, Loren, for being on. Thank you for listening. Thanks for tuning in. If there's ever anything that we can do to answer your questions, feel free to reach out to us at any time. Hit us up on our Facebook page at Thriveonomics. Just do a search for Thriveonomics. You'll find it. Or shoot us an email at thriveonomics@thrivemortgage.com. And we will see you on the next episode. Thanks for tuning in. This is Thriveonomics. The title sponsor of this show is Thrive Mortgage. Licensed in multiple states across the U.S., Thrive Mortgage employs the best professionals equipped with leading technology and the most efficient process to deliver a legendary lending experience. For more information about how we can serve you or to find a local mortgage professional in your area, please visit us at thrivemortgage.com. Thrive Mortgage is an equal housing lender. NMLS number 268552.